Okay, I'm just prepping the live stream. Give me another couple of seconds. Okay, I'm just prepping the live stream. Okay, we're all set.
Okay, great. Well, want to thank you for having us once again. Can't believe it's been a whole year, but it has been. I just wanted to start out by announcing that I'm transitioning into retirement.
Boo.
And what's that?
Boo.
So I'll be around for a little while yet, but
We need you, and when you beat me to it, that's not fair.
when are you going to retire, Rick?
That's a secret.
Oh, okay. Evan, who has been promoted to principal, which in our firm functions like a partner, will be taking over the engagement. He's got years of experience with IDAs, not just this one, but other ones too. So he'll be taking over those as well. So with that, I'm going to turn it over to Evan and Rita. And Rita, I don't know if everybody's met you before, so I probably should introduce.
I think everyone has.
Okay, yeah, Rita's our audit supervisor on the engagement. So with that, I'll turn it over to Evan and Rita.
Great. Heather, can you allow me to share my screen so we can share all the financial reports?
That I can do. There you go.
Excellent. Okay, and can you all let me know when you can see this?
Yep.
Perfect. So thanks a lot for having us. This is our executive summary that we go over every year for the Tompkins IDA and Tompkins Development Corporation. This actually starts with a little snapshots from the executive summary, which just describes the nature of the organization, the relationship between Tompkins IDA and Tompkins Development Corp. That the Development Corp is a component unit of the IDA. And then this jumps into our snapshot of audit results. So we're issuing an unmodified opinion on the IDA and Development Corp's financial statements for December 31st, 2021. So that's otherwise known as a clean opinion. It's the best opinion that you can get. It means that your assets, liabilities, net position, revenues, and expenses are all fairly stated in all material respects. Because we audit both the IDA and the corporation, the Development Corporation, under government auditing standards, we also issue an independent auditor's report on internal control or financial reporting and compliance of GAS, government auditing standards. And that report identified no instances of non-compliance, no material internal control weaknesses at the financial statement level. In addition, we also issue a communication to those charged with governance at the conclusion of the audit, and I will shift to that report right now. So this is the same letter that we provide after every audit. Describes financial statements in the first section, and then dives into qualitative aspects of accounting practices, that there were no new accounting policies that were adopted during 2021. It dives into accounting estimates. If the IDA or Development Corp had any significant estimates, we would list those here and describe how they were determined, but we do not have any significant accounting estimates for either entity, so we just end it with that. Then we dive into certain financial statement disclosures that we believe are particularly sensitive for financial statement users, and we point those out in the letter. The related party disclosures in notes 1 and 6, specifically related to IAED in Tompkins County. We encountered no difficulties in performing the audit. Big thank you to Ina and Heather. Ina, especially with the schedules of projects and getting all the employment information, which is always a bit difficult. We had no corrected or uncorrected misstatements. We had no disagreements with management. After we have the rest of the scheduled projects and everything completed. We'll send a representation letter, which essentially says that we've been provided with everything we needed for the audit. Nothing would change the opinion that we've rendered, the unmodified opinion. There were no management consultations with other independent accountants, no other audit findings or issues noted. And then these next few paragraphs describe our responsibilities related to what's called required supplementary information and supplementary information. So the required supplementary information is the management's discussion and analysis. Just describes the procedures that we perform, that we don't express an opinion on the RSI. And then the schedules of indebtedness and projects are considered supplementary information, of which we perform procedures and we opine on that in comparison to the financial statements as a whole, which we do not have any issues related to them. And then a quick little restriction on use. And back to the executive summary, we also issue a management comment letter, which I will also jump to real quick. So the management comment letter defines deficiencies in internal control, what would be considered a material weakness, a significant deficiency, of which we had no material weaknesses or significant deficiencies related to the audits. And we like to use this letter to describe any future accounting standards. So we have a few discussion items on upcoming governmental accounting standards board implementations that are coming out over the next few years. As we discussed in our pre-audit meeting, the one that appears to be applicable to the IDA and Development Corp will be the leases, which is coming out next year, which will work with management in determining any adjustments that are necessary. And then it has a few more. GASB 89 and GASB 91 do not appear to have an effect on the IDA or the Development Corp, or 92. So with that, I'll turn it over to Rita. Can start going through financial highlights and rest of the stuff from the MD&A, and then we'll jump into the numbers.
Thank you. So as Evan mentioned, the financial highlights, these are just the financial highlights from the MD&A, which is your management discussion and analysis at the beginning of the actual financial report. So combined net position at the end of the year was $3.1 million compared to $940,000 at the end of 2020. And that's really due to your operations and the huge increase in administrative fees due to a ton of new projects during the year in the IDA. Total revenues in 2021 were $2.7 million compared to $211,000 in 2020. And again, the agency processed and closed on more projects in 2021. Total combined expenses in 2021 were $554,000 compared to $824,000 in 2020. And this is really due to the significant reduction in the grants provided by the Development Corporation compared to prior year. Then we have the factors bearing on the agency's future. This comes directly from management, what they think is going to happen in the future, upcoming things that are going to affect the agency in general. So then we get to a 5-year comparison. So first we have the combined statements and then it does break it down. So looking at the combined balance sheet, your total assets increased about 2.1 million or 227% over last year. And again, that is due to closing and processing all those new projects in 2021. Your total liabilities went to zero, so it decreased. You were paying more timely, which is always good. And then again, your total net position increased approximately 2.1 million, again, due to the operations and the increase in administrative fees. And then we get to the statement of activities, which is your revenue and expenses. So as we had mentioned, total revenues increased approximately 2.5 million due to the increase in administrative fees for the new projects in the IDA. And your total expenses decreased about $270,000. And a lot of that is due to the decrease in grant expense from the grants given by the Development Corp in the prior years. Contractual, professional, administrative expenses did increase. And that is due to more grants being given out to childcare facilities during the year as a result of COVID. So that gives us the change in that position. Like I said, this year it increased 2.1 million, and that's over a decrease in the prior year of 612,000. So those are the combined. And then we look at the individual. So we start with the balance sheet for the IDA. Again, your total assets increase. That's where the administrative fee increase comes from. It's in the IDA side. And that's, there's cash, the receivable of 316,000, which you didn't have last year, but that again is related to those projects. And then your total liabilities in that position.
So just to be clear on the receivables, those were projects that closed at the end of the year and the funds were deposited right after in January. So we knew they were receivables and you,
Yep.
Did you adjust them? Yeah.
So you see those skipping a year, just depends on timing of when your projects are closing.
We had lots of flurries to close at the end of the year. Sorry, Rick.
Caught up with them.
The same thing for the Development Corp. Actually, the Development Corporation, total assets or cash actually decreased during the year. And that is due to, you had a significant decrease in revenues and expenses in the Development Corp. So it's just a result of operations. And that's what your net position is as well. And then next is looking at the statement of activities. Again, starting with the IDA, you have your revenues. You see the large increase in the administrative fees due to the projects processed and closed on during the year. The contractual expenses or the expenses for the IDA in general did increase. As I mentioned before, there were more grants given to childcare facilities during the year due to COVID. And then the statement of activities for the Development Corporation, as I mentioned, revenues and expenses decreased significantly. And it's just due to really partially that grant expense. You did not give that huge contribution during the year, which also then decreased the administrative fee for that in total.
Did you want to go over the MD&A, the future factors, a little bit more closely? We kind of jumped through that. Rita, can you make it a little bit bigger, please? So I don't know if you want to spend time on this or not. Anybody? I don't know if you did you have time to read it in the draft? Okay. All right, well, we can skip it then.
I had a question about one of the notes.
Okay.
Note 2 on page 9, operating revenues and expenses. It says that grant expense is reported as a non-operating expense, but it looks like all those COVID grants you lumped in with operating expenses. The COVID grants were like 83,000 or something like that. Like here you've got them professional and admin expense. You don't have them as grant expense reported as a non-operating expense.
So it appears it's not consistent across entities where it is non-operating for the development corp and operating for the IDA. So we'll just have to be consistent between both entities. So I believe we'll move this 83,000 down to this line right here for the IDA. Good catch.
Thank you.
If I could comment on future factors, I was on mute and trying to talk, of course. But Heather, was this our most active year ever? 21?
Most active year in several decades.
Okay. Do you see that we may have a wave and a trough?
Oh, absolutely.
So you think we may be heading into a trough? Should we be doing something with a reserve?
I've always said we should hold a little bit of reserve to pay for, administrative expenses and expenses to IAED over, 2 or 3 years. I think that that's important that we do that, because there may be this year or next year that we don't have, any projects and we see that income earned completely drop off. I mean, this year is not starting out like last year did.
Okay. Well, should we be having a conversation about that at the IDA?
We will be, through one of the committees, having discussion about fund balance and recommendations on our large fund balance this year. So I think that'll be part of that conversation.
Okay.
Do we want to get into the report itself?
Yep, I was planning on doing that.
Okay.
Yep. Okay, so any other questions before I dive into the main financial report? Okay, perfect. So the beginning of the financial report is our independent auditors report. So from our pre-audit discussions, we mentioned that the structure of the report was going to change around a little bit, and there are going to be some additional items that are added to the report. So I'll dive into those right now. It starts just like our executive summary, dives right into the opinion, tells you exactly what that is, what everyone wants to know, which is the unmodified opinion. Then it describes the basis of opinions, how we ultimately arrive at that. Responsibilities and management, which is unchanged from previous years. And then dives into the auditor's responsibilities for the financial statements, adds a significant number of, or significantly more information related to our responsibilities, related to reasonable assurance for the financial statements, and then some additional bullet points related to other procedures performed and related to our audit, exercising professional judgment, identifying risk, material misstatement, understanding of internal controls, evaluating accounting policies for reasonableness and significant estimates if there were any, and concluding if there was any going concern issues, which clearly aren't right now, and that we're required to communicate any issues that we come across if there were any, which there weren't. And then describes the required supplementary information and the supplementary information that we touched on during the executive summary of the management's discussion and analysis and the schedules of projects and indebtedness. And then has a pointer paragraph to our report on internal control over compliance and financial reporting that has no issues to report, which is at the way end of the financial reporting packet. Then following that is the management's discussion and analysis that we had a few excerpts from within the executive summary that Rita went over. Describes financial highlights, the basic financial statements, what they are, the component unit, which is the development corporation, as well as the changes between current and prior year for the statement of net position, statement of revenues, expenses, and changes in net position that we went over through the executive summary, and reasons for the changes right below each chart, as well as the factors bearing on the agency's future, which was in the executive summary. Following that is the main financial statements, splitting out between the IDA and the development corporation that we went over through the executive summary. And then the one change that Heather pointed out, that we're going to move this $83,000 in the grant or whatever is attributable to grant expense down to the non-operating section. And then the statements of cash flows, we did not go over through the executive summary. So this shows the cash flows provided by operating activities, significant amounts from fee revenue, and then the contractual expenses, all that resulting in positive cash provided from operations of $1.8 million. Similarly with the grant expense, I believe this page will also be updated where that will move down here to this non-capital financing section to mirror the development corporation. And all of that ended in a positive increase in cash and cash equivalents of $1.8 million, ending the year $2.7 million in cash. And this bottom section reconciles between your cash provided from operations to your operating gain, shows any increases and decreases in accounts payable and receivable, and would back out any non-cash items, which there weren't any. Are there any questions on the cash flow statement before I dive into the notes to the financial statements? Nobody's on mute trying to talk. Okay, so the notes to the financial statements. Note 1 describes your summary of significant accounting policies. This is unchanged from the previous year. Describes the financial reporting entity, the component unit being the development corporation, your basis of accounting for cash, equity classifications, related parties with the area economic development, and operating and non-operating revenues, how you classify each section. Notes 3 and 4 are yet to be updated based on the finalized schedules of projects and indebtedness. We'll have the final numbers related to outstanding bonds for the IDA and the corporation, as well as the total property taxes abated, any sales tax, mortgage taxes, exemptions that would tie to the scheduled projects. Note 5 describes your deposits and investments that they're required to be insured within financial institutions, as well as covered by FDIC. The total bank balances were $2.5,258,000 for the agency and development corp respectively, which were covered by collateral and FDIC. Note 6 describes related party transactions with the area economic development and just contractual services provided and the payment of $444,000. In addition, note 7 describes the commitments. So what's committed to IAED next year, $452,000, and then additional contractual services and ARC grant expenses that are yet to be paid out.
So Evan, the commitments show up in the notes, but they don't show up as restricted cash or anything like that in the financial statement?
Nope.
Thank you.
So note A's contingency footnote that you're exposed to risk of theft, loss, damage, destruction of assets, and that no settled claims have exceeded insurance coverage. And note 9 is carryover from previous years, just uncertainty related to the COVID-19 pandemic. that residual effects are still in place, and we have no idea when it's going to be over with completely.
So I think, Rich, that might address your question about sort of factors bearing on the organization, those uncertainties. That last sentence, we expect disruptions to business and residents, which could negatively impact operating results in future periods.
And following the statements is the schedule of indebtedness, which may appear to be updated. I don't see anything highlighted in yellow, so it appears
It is
maybe
updated.
Okay, so we just need to update the footnote based on the outstanding balances for the IDA, which is 28.4 million. And then the Development Corporation appears we're waiting on one additional item.
Yep.
In order to determine the ending balance.
We actually did receive that. That's been updated.
So
It doesn't
we
change,
have
but-
not updated yet. And then following the scheduled projects, we're yet to update this whole section. I believe there are a few more employment confirmations that.
Hey, kudos to Ina. Out of all these projects, we have 1, 2, 3, 4 that we're really waiting on. So lots of reminders and lots of organization on Ina's part. Thank you.
And
good
you can
job.
see there are many.
Mm-hmm.
There are many to follow up on.
I actually heard from one just before this meeting regarding the sales tax, and I should get those documents today. So we're getting closer.
Excellent. And then the final few pages of the financial report are the report on internal control or financial reporting. It dives into the descriptions of what a deficiency in internal control would be. And then on the second page that we had no issues of non-compliance related to the audit and then the purpose of the report. So overall, very good audit yet again. Tremendous thank you to Ina and Heather for all their work and providing us with everything that we need so timely, and then continuing to follow up on the schedules of projects, which is always very time consuming and not as timely as we hope from some individuals.
Yeah, and I just want to point out that, it was, I think, 2016 that the state enacted legislation that requires the IDAs to put a cap on the amount of sales tax abatement that they will provide for each project. So we do track that internally, and the projects have to report it to us every year. They report it on a form to the state every year. We get copies of that form. And, we have several projects that are multi-year construction projects using that sales tax exemption. We try and keep really up to date on that, because the state regs say that if you spend more than you were allocated, we're required to claw it back to recapture it plus 9% interest. And it goes back to the wherever sales tax is supposed to go, to the local and the state authorities. And we don't want to end up in a position where that happens. This year, we actually had one project that submitted the third year of their sales tax exemption, and it red flagged all over the place that it was too high. And Ina picked that up right away, and we went back to the applicant, and it turned out that they had switched some staffing and they double counted a number of their sales tax expenses over the course of this past year. So they were able to rectify it, amend the state form, and it looks right in our system now. They're actually under by about $30,000. So thanks to Ina, and the checks and balances are definitely working.
Good. That's great. So yeah, a wonderful report again. So kudos to all of you. Any questions for us? Any other questions? As soon as we get the rest of the information and can get the schedules updated, we'll go ahead and start the finalization process as soon as we have that.
Okay, and I know we don't have a quorum of our IDA members on this committee today, so I wonder if we can just recommend to the IDA that they adopt the audit or approve the audit when it's finalized.
Yes. Jeff, what do you think?
Yep, that's fine. I think if you can, so Heather, if you can maybe just send it off to the members there with a copy of the final report, and then we can just respond back via email.
Okay.
Great.
Okay, anything else?
You know, I forgot to say thank you to Rick for providing the binder. You know,
Rick.
I'm thinking Heather and Ina and the guy gives me the binder. With everything, and I just say thank you to
That's
them.
honest.
Sorry about that, Rick, but thank you very much. Appreciate it.
Good catch, Evan.
Welcome.
Yeah, I'd say I had nothing to do with it, but I'm always willing to take credit. Just so you know.
Thanks, Rich, for all that you do.
I want to thank Rich for always coming down to sign checks at the most inopportune time, probably, because we get checks that require his signature from time to time, and he always makes himself available, and we have pretty good turnaround time on that. Thank you, Rich.
Well, you're welcome. And, we've been meeting in the parking lot, so it looks like we're, dealing drugs, but with paper checks.
We are on live stream here.
I was just checking the members of the Finance and Audit Committee. So we have Jeff Gorski, we have Rich John. That's two of the three, the other person being John Guttridge. So technically, we have a quorum of the committee.
Yes, you're right. We do.
So they could approve it, because I know the board gave final authorization to the committee.
So the board gave authorization for the finance committee to approve it. So
So
we
can
have
start
a
doing that.
quorum.
All right, I would move it.
So, Rich, I think I would prefer can we just have a final financial statement? I know there's a couple of tweaks there. I'd just like to do a final.
If you're more
review of it
comfortable, that's fine.
And, before, and then I'm happy to send an email and say approved after that.
Okay.
Great.
Okay. Well, thank you all very much. Once again, great seeing everyone.
I
Okay.
got one question for Leslie, unrelated topic. Sorry, guys. On the health insurance consortium audit, which Mimi is this week, can you tell me who else is working
Have a
with?
good day, everyone.
Bye-bye, Jeff. Thanks. I'm sorry. Say that again, Rick.
Can you tell me who else is working with Mimi on that audit?
Conrad is working. I know he's working on it.
On the health insurance consortium. Okay, Conrad and Mimi.
Yeah.
Okay, thank you very much.
You're welcome. All right, everyone. Take
Thanks a
care.
lot.
Have a great
you.
day.
You're
Yeah.
welcome.
Bye.